I'm Simon Prowse, and this is NavTalk, brought to you by the Navwealth Financial Group. Hello everyone, and welcome to another edition of NavTalk. Today, I'm very excited to bring to you the key members of the Navwealth team, and more particularly, Craig Banning, our CEO. Hi, Craig.
Hi, Simon.
Hayley Kalms, our Director of Bookkeeping. Hi there, Hayley.
Hi, Simon.
And Simon Prowse, the Director of Navwealth Finance, our joint venture partner.
Hi, Simon.
So, Craig, let's start with you. How's 2023 been for Navwealth, and what news have you got for us?
Well, as you know, Simon, I think 2023 was certainly a milestone year for Navwealth. We hit a milestone of 40 people working at Navwealth, which we're all very proud of. 40 people helping our clients through our integrated advice offering. We had the largest intake of new clients this year, which is really interesting. I think that's for a number of factors. One is there's so many financial advisors left the profession over the last few years, so people are struggling to try and find a financial advisor. We also had a wonderful merger back in July with Johnston Associates, Steve and Julie bringing their client base over to us for us to work with, but I'll leave you, Simon, to talk more about that. And so I guess really the integrated advice offer we have of accounting, bookkeeping, financial planning, and mortgage broking, I think in 2023 really proved to many of our clients just how successful it is. When I think of mortgage broking, which I'm sure Sally's going to talk about later, there's just so many people refinancing. It's become so much harder. So having that consolidated advice and all of us working for a client, I think really did make a massive difference for our clients in 2023. And then for Hayley, 2023 was, I think, the biggest year of growth for her in her business, but I'll leave Hayley to talk about that. We've also launched a new website and branding. And I know personally, I had a lot of great feedback from clients, and we ran a lot of client events. So 2023 was, I think, a real milestone for Navwealth, Simon.
And in terms of the integrated advice, for those who really don't understand that out there, Craig, how would you sort of define how that integrated advice, what it means and how it's been working?
Yeah, I mean, we all hear this in Navwealth every week. We get clients say to us, wow, it is so wonderful coming to one firm and having all of my advice providers working together in harmony, making my life better. I mean, we hear this every week, and we've started doing some more testimonials about that because it really is what makes Navwealth famous.
Yeah, and more particularly, if everyone's sort of pulling in the same direction, it's much easier to get an outcome, right? And that's that integration piece.
Absolutely.
Yeah, great. So in terms of the Navwealth website, I see you grinning a bit. We've actually seen that the website upgrade has sort of had a few hits and gathered a bit of traction.
Well, yeah, that was probably the biggest surprise to me. It made me realize how old I was because generally all of our clients come to Navwealth over all these years, 32 years, by word of mouth, referrals from either our existing clients, family, friends, or other professionals like lawyers and so forth. And this year, after we launched our new website in July, we all of a sudden had an influx of people coming to us by simply Googling for advice. And yeah, that's been a huge surprise to me.
Well, that's great. So it just shows that putting with those businesses out there, putting a bit of investment into that website can pay a few dividends, especially as we move to a more modern age and IT and where our IT industry is going.
For sure.
So let me switch over to you now, Hayley. We've heard from Craig on the fact that you've seen a massive growth in business and that bookkeeping arm has really taken off. Talk to us a bit about how that's been working and the year 2023 was for you.
Yeah, 2023, I think more and more people and clients are realizing there's so much more compliance and things to consider now when you're running a business. And I've seen a real influx. I was talking to Craig before the last few months of actually consultants. So people that might have come out of corporate world, gone out consulting themselves now. You rethink your life after COVID and everything, going on a different path. They don't realize that running a business includes bookkeeping, and that bookkeeping is actually a different offering to accounting. I'm really seeing people being more aware of that. And that's just seen us grow quite a lot actually in the last few months. I've seen a lot of new clients come through the door.
So in terms of that, what you're saying has been a bit of forced growth. So what I mean by that is people that have gone new into the business world and they've had to, pull their socks up and stay compliant. And what we're all aware of is that compliance burden is not so much a bigger burden, it's more straight in your face. It's got to be done within a few days rather than months. Is that what you're seeing a lot of?
Yeah, I'm seeing a lot of, so I think the ATO have got seem to be a lot more requirements these days, with STP and super. It's becoming, gone in the last few years, I think the ATO have been a little bit lenient too, because we were going through COVID, and now it's sort of time to actually put your compliance in place, and they're requiring you to do that. And that's hard. It's time consuming. So yeah, I think people are finding it more harder to find the time to do that compliance, and that's where the bookkeeping can come in, because that's what we're good at. We're good at doing that for a small business.
And so too those hard deadlines. I mean, you mentioned STP, single touch payroll. The ATO and the requirements of reporting within literally as you're pressing the button on payday is creating a bit of a challenge, because people, they've got to reply and they've got to report, and that report is generally got to be accurate, right?
Yeah, correct. Yeah, because it tracks everything now. So we're starting to see it flow through to your activity statements, through to your super funds. So it's starting to track. It flows through to the Services Australia. So everything is now becoming more linked. So that information is like really important to get correct.
Yeah, so while the information's great to have, it's harder to make sure it's captured in the right way. I want to segue a bit too, Hayley, because I'm seeing a lot more. Not only are people using the bookkeeping services for a compliance outcome and making sure they tick their box, what they're also starting to do, which has been sort of really nice in a way, is take interest in their numbers and be really wanting to know how they're tracking on a regular basis. Talk to us a little bit about that.
Yeah, so we've found our offering now is becoming more management reporting every month, and actually reporting on the performance of their business. And they want to know where is all their cash going. And we need to sort of explain to them, the difference between cash and your P&L. And actually people are becoming more interested in that, I'm finding, especially new clients coming on. So that's becoming a bit of a growth area as well. Us business consulting, management reporting.
Yeah, and that then leads into other things like budgets and looking at business units and trying to get some real intel on where the business is profitable and what levers can be pulled to get better outcomes. Is that fair?
Exactly. Yeah, exactly.
Okay. Now we jump from bookkeeping to the world of finance and high-flying finance and what's going on in the world of mortgages and finance. And so give us a little bit of what 23 was for you.
23 was totally a year of changing interest rates on a monthly basis that we saw in the first half of the year. We slowed down for a couple of months, but now we're back into it. Change in banking policies, which was a big thing because the banks had to react to the tighter servicing around the increased interest rates. It was a year of property prices and the media actually being wrong, I think, because we haven't seen the big fall in property prices, especially in the major markets in Australia, such as Sydney and Brisbane, that was predicted a year ago. And what that has also done is push up rental prices, which have also been a big talking point in the media, because what we've seen is this lack of supply that seems to continue, and all government policies changing in terms of like how many people they're letting into Australia. So that's been a big change in the market that I don't think anyone really predicted, and just trying to keep up with what's going on, it has been
So I think you've struck a nail on the head there that we probably, or the economists probably got wrong. It's a supply and demand thing, and we just didn't have the supply in order to allow these changes in pricing to filter through to rents. Is that fair?
That's correct.
So the lack of supply, we're going to see a lot of government change. Do you think? What's going to happen in that world?
Well, the latest that we've been listening to the news is that the government's really got to change the density in the city. Like one of the things I was listening to last week on the radio was that we are the least densely populated city in the world. So they need to do something. Instead of going outwards, we need to be going upwards, if you like.
So increasing density, therefore increasing supply, and hopefully bringing property sort of under control in terms of price increases, because the more rent goes up, obviously the price of the property will follow.
Yeah, so affordability has been a big thing this year with mortgages as well as people's living expenses and budgets.
Let's talk a little bit about that. And we're hearing a lot about mortgage stress, and mortgage stress caused by the many increases in interest rates over the past like 18 months or 24 months even. What are you seeing in terms of these fixed rates and a lot of people coming off fixed rates, and how they're managing to get a new mortgage that might be significantly higher than the past?
Well, as I said, one of the big things was changing bank policies. So some of the banks come to the party in terms of decreasing their servicing buffers to allow people to not be mortgage prisoners as such. So it means that they are able to move their loans to a cheaper alternative, extend the loan term, for example, because that helps on the monthly cash flow, as well as maybe restructuring the loan to some of it interest only, which we've been able to do to help people's cash flow.
And in terms of that mortgage stress and tightening the purse strings, we see the headline rates from the banks and what they're doing. Are you able to get a better rate by being a broker and having an interaction, or is it really, you're at the mercy of the big four and what's advertised is it?
No, we pretty much have to do pricing for every person that comes across us because we know what other banks are offering, and so we will be able to hopefully get the client the best outcome for what they are needing.
So in terms of a client then, that they might be with a major bank and their rates coming off fixed and they'll generally interact with the bank. But by coming to a broker, you might be able to give them a better solution, a better outcome that might suit their needs better and be cheaper.
Yeah, correct.
So are you still seeing, are there a lot of clients still to come off fixed rates, and how are you providing solutions for those people?
Yes, we are. A lot of clients, still about 50% are coming off the next 12 months. So there's only probably half of them have currently come off. So what we do is we liaise with the current bank to see what they will offer, and we'll always give the client some alternative options so they can make the decision by themselves and see what is best for their situation.
Okay, that's great. So client by client, and by going through you guys through the broking network, you can get them outcomes that are often better than they thought they could achieve.
Correct.
So you've got the option as people are coming off fixed rates and they're looking to alternatives. Talk to us about your panel, all those people that you could potentially put clients to. What's changed there?
We have seen probably about 10 new lenders come onto our panel just in the last 6 months. For example, one of the big things that happened last week was Bendigo Bank, which has never been in the broker channel, has come on board with brokers. So that just gives us a few more options. They offer some products that other banks can't. We also have some new digital lenders, for example, especially for small businesses, because one of the things that we know is that small businesses do need cash flow to keep them operating. So businesses looking to expand, businesses looking to take on new staff or buy other businesses, it usually require funding. And there's definitely a lot more lenders that are in a position to be able to do that today, as opposed to probably 12 months ago.
Well, Simon, now I'm going to ask you. We've heard from myself, we've heard from Hayley, we've heard from Sally. What's going on for you in accounting?
Well, it's been an interesting year in accounting. As Craig mentioned earlier in his talk, we've seen the merger of a business, Johnston Associates, or Steve and Julie, and I'd like to take my hat off to those two. It's been a big change for them, obviously coming from a smaller, boutique style business into a bigger business that is Navwealth. There's been an awful lot that they've had to pick up and understand and build into their processes, and they've done it in their stride. In fact, they've really shown us that you can do this and you can do it well. client-focused approach to managing the work will allow things to work in the background. So, Steve and Julie, if you're listening to this, I do commend you both, and it's been a blessing to have you come on board. And I think those clients, Craig, have started to see that integrated advice offering and started to see what Navwealth can do for them in terms of a much more holistic approach to their financial and wellbeing needs, which has been great. We've seen a high intake there.
Yeah, I mean, I would echo that, Simon. It has been a privilege having Steve and Julie join us, and I've loved watching Steve and Julie bringing their clients into Navwealth to various parts of the business. In fact, in 2023 already, and seeing the joy on Steve and Julie's face, knowing that their clients are getting some additional solutions that they wouldn't have had before.
Yeah, that's been great. And from the Navwealth accounting team, we've continued to expand and look for efficiencies out there. And if you like, I think this space we're just starting to see the early interrupters, if you like, or the earlier adopters of the technology. We're seeing technology get smarter and smarter. I know with Hayley's team and their bookkeeping that technology is now sort of preempting transactions. It's identifying things that are wrong. So from the point of view of us accountants, we sort of are looking at that and taking that to a level where we're now not so much rather looking at the shoebox at the end of the year and gathering it all together and coming up with a set of numbers. We're actually getting numbers that are real time and live and being able to work better and more proactively with those numbers and give clients a real peace of mind into where they're going. We've also seen that the clients now looking for more intel, and this is management reporting that Hayley alluded to earlier before, where they're actually looking for that data and using it to help guide their businesses, where 3 to 5 years ago, that just wasn't on the landscape. It just wasn't there. So I think a lot more of what we do is front of windscreen. I've always said accountants tend to look in the review mirror because we tend to, create our financials on the back of a past year, but now we're creating them on the go and they're much more in your face. So it's a lot more of a change in that accounting industry. And it's, as I said, this is the early adopters. We're going to see some more movement in this space, and we're going to see some more reporting requirements, unfortunately, to go with that.
I mean, can I just say, Simon, it's really obvious, isn't it, that if you run your own business these days, even if it's small, it's very difficult to do on your own without bookkeeping, without accountants. I mean, you've just got to be all over your numbers really quickly, not 18 months after the event, yeah?
Yeah, it requires a lot more sitting at that kitchen table till 12 o'clock at night to catch up. It's not a quarterly catch up anymore. It's much more regular. And single touch payrolls sort of forced businesses into that. The other thing in that is if you do make a mistake, it's harder to fix because there's so many entities relying on that information when it fills through and you sort of wave the flag up and said, oops, I got this wrong. And then you've got to try and make it right. And it's very hard to fix once you've gone down that road.
Yeah, I'm sure Hayley hears many stories when people first come on to bookkeeping about how Hayley's giving them their life back. Is that right, Hayley?
Yep. Time. Everyone wants time back.
Who wants to be doing bookkeeping at 10 o'clock at night?
Exactly. I'd rather be out socializing with friends and family for sure.
And that's been a breath of fresh air, Hayley, for the accounting team as well, because they've picked up work in the past that's been done and been done on the kitchen table at night, but it's done with speed and probably less accuracy because we're time poor. So that's been a blessing in terms of getting numbers that are much more accurate and they're coded in a way that we can interact with it quicker and get the financial reports out in a more meaningful fashion. Oh, so that was great, guys. So we've looked at 2023 and what's been going on. Now let's look towards 2024 and get the old crystal ball out. So, Craig, I'm going to revert back to you. In the wealth circles and a little bit on the CEO side of Navwealth, what are you seeing for 2024?
Yeah, Simon, I think 2024 is going to be another great year for Navwealth. I think there's 4 major themes I'm thinking about for next year, 2024. And that is, first of all, the pressure will continue for family budgets and business budgets. So there will be, it'll be challenging for businesses to control their costs and maintain their profitability. Hence, they need an accountant and bookkeeper. I think the super changes that are proposed to go before Parliament next year will bring back more discussion around changes to superannuation, particularly for the higher end superannuation balances above $3 million. I think the economic climate will become more challenging for business owners. Large employers will want to see their employees come back to the office. AI will start to make a real big impact, and it will have, continued unrest globally. So all of that will feed into investment markets and it will continue to be a volatile year. So I think hopefully inflation's starting to ease. We'll hopefully see interest rates pause or slightly fall during the latter part of 2024. But all of that means that clients that are sort of part of an integrated advice solution like Navwealth, I think will really benefit the fact that all of us are working together for our clients.
Now, you mentioned something that could scare a few people, especially our self-managed super fund people out there. You mentioned super changes and the change of government. Can you give us a little bit of what your thinking is or what you sort of heard on the streets with regard to super, just to sort of put it in perspective?
Yeah, well, there's been a bit of press already about this $3 million per person limit where you get additional tax above $3 million each. So for most people in Australia, they don't have $3 million in superannuation. So therefore, for many people, they may think it's not a big deal. But there are some parts to that legislation that are pretty serious. And the coalition government's going to push back pretty hard, I believe, on wanting to tax unrealized capital gain and not have indexation on the $3 million. So it'll just mean there's more talk about superannuation next year, which even for those that don't have 3 million or more, they'll still hear all these changes, and it creates a little bit of unrest in the superannuation environment. And often people want to bring their advisor and just talk about their superannuation.
Oh, no doubt. And when you think of the amount of the population that's looking at their super more regularly now because they're getting close to that age or in it, it becomes, higher on the priority levels, yeah?
Exactly.
Now, Hayley, we've heard from Craig just a little bit on the world of finance and a little bit about Navwealth. What do you see happening in the world of bookkeeping?
Yeah, I think Craig touched on it there a little bit where, it's going to be harder and harder to do business, I think, with increasing costs, or people are going to be a bit more worried about that. So I really see us continuing to grow and continuing to see clients come to us for that reporting we mentioned, to know exactly where their cash flow is, how their business is doing, and making decisions and helping them make decisions to stay on the right path.
Yeah, so a lot more regular reporting and a lot more clients sort of saying, okay, you guys pick up the bookwork because it's too hard for me. I don't do it that well anyway. So let me get on with what I do best, going out and make money, because it's going to be harder to do.
Exactly. I really see that continuing to be a major offering that we'll give to our clients.
Yeah, that's fantastic. And from what I've seen and the clients that I'm working with, that offering is fantastic, and it's reasonably priced. It's not going to hurt the hip pocket dramatically, and it's giving them back that time and, like we said before, allowing them to focus on their business, not be stuck in it at night trying to sort of reconcile a bank.
Exactly.
And Hayley, do you see a lot changing? We touched on AI really briefly. Is there a lot of change you're seeing in your world? We've got this e-invoicing word that's or note that's out there. What do you see in that? Is there much change you can see on the horizon?
Yeah, definitely. AI is changing so quickly, and there is so many things we can actually use this AI to help with this management reporting that we're offering to clients. But even down to the level of data entry, it can just help us be so much more efficient and accurate for our clients to then get those more accurate financial results to make those business decisions. And we just emphasize with people, we actually, the bookkeepers are helping your accountants. So our offering as a bookkeeper is very different to an accountant, and as us doing that work, using the AI to make that more efficient and quality results in the bookkeeping will then help your accountant make better decisions for them as well.
Yeah, absolutely. The information coming to the accountants that's quality is fantastic, but it just changes the way the accountants work on the file. They do what they do best, which is not fixing transactions. It's actually interpreting the numbers and making sense of it. So that's great. All right, and thanks for that, Hayley. Now, Sally, the world of finance. What's 24 going to bring? You think? What's it looking like, and where's it all going?
Well, as Craig said, yes, we hope that there is a pause, at least on the interest rates. They are at the moment still probably tipping there's one more rate rise before it decreases by the end of next year once inflation is under control.
So you mentioned decrease. So we may see another increase, but then the economists are expecting once that increase sort of flattens, where it's to see it go the other way again.
Well, in 12 months, they're sort of predicting that.
Okay, so it's hit a peak.
Yes. We weren't meant to see any rate rises though till 2024 anyway, so who knows? And we're still looking at record migration. So they're predicting the house prices will probably just even out, not decrease like they originally predicted, and probably not go up so much. There'll be still pressure on rentals with new people coming in, and building has not been able to keep up with supply because of COVID and numerous supply restrictions, etc. What we're also seeing is actually diversification, as I mentioned. So we talked about SMSFs. We're looking at a lot of more lenders actually entering that space. There had been a lot of lenders that left that space, or the big banks left that space, but we've seen a lot of second-tier lenders actually go into that space. I believe there'll be more changes in banking policies to allow them to be able to lend money, because that's the core of their business.
So the bank policies, or the policies that the government has provided, has been around those central banks, the big four or the big ones, and the second tier lenders have been able to fly under the radar and get away with a bit more. Do you think that playing field's going to be levelled up by the government, or do you think the government's interest is still to increase these non-bank lenders or the second tiers?
I believe that, what you're talking about is deposit-taking institutions, which are governed by APRA. So the second-tier lenders aren't so much, because they don't have deposit-taking facilities. And one of the things I haven't really mentioned is like the increase in these second-tier lenders becoming more competitive in, say, the low doc space, for example, because we are seeing more of a reliance on financial planners and accountants to say to the banks, yes, okay, we are okay with these guys' financials, basically, so give them the money. So that's interesting as well. And the pricing is a lot more competitive than it used to be. So we used to be able to get low doc loans at, say, 2 or 3% higher than general loans, but at the moment there's probably only about 1% difference, sometimes up to only 0.5% difference.
Okay, so we're seeing an increase in low doc marketing, or a push for the low docs, and the pricing of low doc is now comparable. So it makes sense if you've got reasons that a low doc loan works.
Correct.
Okay. Is there anything else you see on the horizon for 2024?
Back, the investors coming back into the market. Again, people looking for diversification with the increased rental yields. People are able to actually make a bit more money and have some positive geared properties. So as everyone is looking at cash flow, that's just one way to look at things in terms of getting extra income into your family budget. So, looking at a long-term future, 10 years down the track, that look like for you in terms of your household budget. So we talk to a lot of people about how they can use investment strategies into property to help their future retirement.
Yeah, and you're doing that with the Navwealth team. So again, the integrated advice bit and all that sort of works really well. And you mentioned earlier just about the finance or commercial loans. We're going to see a lot more in that market now, and businesses that need finance. Do you think that door's going to open a bit?
Correct. And again, a lot of the banks have changed their policy. So just some examples are longer loan terms, like you would never be able to get a commercial loan a couple of years ago for more than 15 years now. A lot of the big banks are lending up to 30 years, especially for secured property. So that's a good thing. So again, that helps in the cash flow on a monthly basis. It's not over just a 50-year loan term, it's over a 30-year loan term, offering interest only, say, for example, up to 10 years as opposed to 5 years, which it used to be previously. And also very competitive rates. So a lot of the commercial secured lending is very comparable, say, for investment lending as well, because the banks again are wanting to diversify their offerings.
So diversification, a lot more options for businesses or private individuals, whether it be low doc, full doc, or other forms of finance are going to be available. And we're likely to see some government changes around houses to try and keep those prices down.
Correct.
Great.
So Simon, what do you see for 2024 in accounting at Navwealth?
Look, accounting's a funny old beast. The way we produce financials and the way we prepare tax returns hasn't changed in all my time I've been working as an accountant. Earlier for 2023 that the timelines between getting the information and producing it is being cut down, and the efficiencies with which we can report and get information together. The other thing that is sort of driving us a little bit now is that on the finance and wealth side, we're having a lot of clients come to us because they need their accounts prepared to talk to a bank or talk to a financial institution or go to a wealth advisor to create a footprint, and that information is pretty critical to making the map or the answers come out. So we're seeing a lot more around that, and clients wanting things done, not so much now driven by the ATO, more about their circumstances and their personal needs. We're also seeing some change in software, as I mentioned again, the AI, that is going to be disrupting our space. How much so, we're not sure yet. We're waiting for our providers to show us their hand, but we are going to see some changes. And the final big one for us is this gathering of client information, or if you like, ID checking and linking them up with the MyGov platform. That's proving to be a bit challenging, and we're going to see a lot more of that in the new year, with the anti-money laundering and fraud being top of everyone's priority list in terms of clamping it down so people don't lose their identities and are who they say they are when you're talking to them.
Fantastic. Yeah, that's certainly going to be a big deal next year.
So guys, that was fantastic. And thank you all for your intel. Like you're the leaders in your space, and it's been really good to get an understanding of where you see your parts of the business, the integrated advice business, working, and what clients can look forward to from the past year, and more particularly moving forward. So I know we've all been working really hard, and the year's we've got 2 or 3 weeks left now to Christmas. I know that on behalf of Navwealth, I'd like to say to all our clients up there, thank you. And we hope you have a very wonderful Christmas and get to spend time with your family and friends and really enjoy that break, and you can refresh or recharge those batteries. And we look forward to 2024 and all it brings. So on behalf of the team here at Navwealth, I'd like to thank you all once again for your support and wishing you and your families a very Merry Christmas. Thank you for listening to NavTalk. If you'd like to catch up on other episodes from this series or previous, head to our Navwealth website. Until next time.